Hello and welcome to our session on private equity and venture capital financing. In our last session, we dealt with raising external financing. And when we got to the area of equity capital, we did come to realize that we can raise through public offers such as IPOs or seasoned offers. And there's also a possibility of private equity placement. That's where we sell shares or equity to a select group of high net worth individuals. Now, looking at the issue of private equity placement gives one the reason or the possibility to reason out that we could raise equity capital privately without necessarily listing or trading, which then brings us to the issue of the private equity capital market. Now, there are avenues for raising such equity financing, and some of them that we're going to look at, one of the popular ones are the private equity, using private equity firms, and venture capital financing. Now, the objectives for this session will be to look at defining and outlining the characteristics of private equity and venture capital, to outline the main differences between private equity and venture capital, because sometimes they seem to be mixed up and used interchangeably, but they are a bit different. Outline the procedures for accessing private equity and venture capital, and then within the ecosystem of Ghana, have an overview of private equity and venture capital as it plays out in Ghana. Now, let's start by understanding private equity. Now, private equity is equity capital that is not publicly listed or traded. So in this case, this private equity is source of capital that comes from high net worth individuals and firms. So private equity generally involves the formation, in this case, the private equity we are focusing on, which is not private placement, is equity that generally involves the formation of an investment fund in which the capital of multiple investors is combined. So that private equity firms can be seen as fund managers that usually make long-term investments in private firms and later recoup their investments via equity sales. So in short, they buy to sell, and their horizon usually works around between 4 to 7 years. What they do is to usually target, in this case, a private equity, distressed firms with high performance potential. We'll come to understand more of that as we move on. Now, let's also look at venture capital. Venture capital is also private equity, but this private equity is usually invested in new and young businesses that have high growth potential. So the investment is usually premised also on the long term, and then their focus is to invest in these high growth firms that are young with a view to taking the firm public at a later date to enable the venture capitalists to harvest their investments. So now let's compare the two. When we talk of venture capital and private equity firms, both of these entities or these alternative funding mechanisms raise pools of capital from accredited investors, either high net worth individuals or firms. Their goals are typically the same. They invest, increase the value of the businesses they invest in, and then sell them or their equity stake in them to make a profit. But they do have some differences. First and foremost, in the types of companies they like to invest in, the levels of capital that they normally invest, the amount of equity stake they obtain through their investment, and the portion or the point of the company's life cycle that they like to get involved in. So when it comes to venture capital, the venture capital targets startup and young firms. Private equity will target mostly mature firms that are already established, so quite mature firms. Private equity firms normally would want to buy from 50% up to almost 100% ownership in the companies that they want to invest in, whereas venture capital want to invest 50% or less. So this also has dynamics for their risk potential and appetite. So compared to venture capital, private equity firms put up larger financing into one company at a time. So Those are the differences. Now, when you want to access venture capital, for example, so this is capital that is usually targeted at young and sometimes startup firms, the request for financing and business plan must first be submitted to the venture capital firm, which will then determine the merit of the proposal. If then we move on to the initial negotiation, if the venture capital firm is interested in the young company, then it will negotiate the general terms and structure of the investment with the company, and therefore now submit a recommendation to the investment committee of the venture capital firm for this initial approval. If there is initial approval for which reason the proposal is approved, then it will be necessary to conduct some fact checking so that all the facts and assumptions presented in the proposal, from the products to its technology, the market, management, etc., will be subjected to due diligence to ensure that it actually is fit for investment purposes. And once that is done, then we move on to the final negotiation and completion. A number of issues to be covered, but the key points usually will be the pricing, the structuring that will go into how the loan or the funding should be structured, the role that the VC firm will play within the whole setup, monitoring elements, and how it intends to exit. When it comes to accessing private equity, they seem to work on the flip side of usually sourcing for, meaning that they actually prowl and look out for. They look out for, because remember, they normally try to look for firms that have growth potential but have weaknesses, usually in their management or anything of that sort. So they go sourcing. Or in some cases where a firm would like a private equity firm to come in, they may get an investment banking firm to anonymously provide a teaser on them, so that in this case, a firm that wants to get a capital could get an anonymous teaser written on them to give a sense of who they are and what they offer. And once the sourcing or teasing is taken up, then we move on to the next stage of signing a non-disclosure agreement to put in the basic parameters. Then there's an initial due diligence, after which an investment proposal will be submitted to the relevant decision-making body. Then there's a first round, or we'll call a non-binding letter of intent, that puts a few of the structures in place. Then further due diligence to begin to vet this structure them more. Remember, they spend a lot of money, so the due diligence is quite stringent. And then they'll go on to create an internal operating model as to how revenue and expenses, etc., should play out within the whole planning. Beyond that, then the preliminary investment memorandum goes on. And then there's a final due diligence to ensure that all the T's are crossed and the I's are dotted. Then the final investment committee approval, a final binding bid, and then the signing of the deal. Now, you can look at it and realize that when it comes to private equity, this procedure can go on for quite a number of months, even up to a year and that. Now, let's begin to looking at the prospects of private equity and venture capital, especially in a setting like Ghana that seems to have a bank-dominated financial market. Private equity and venture capital obviously present a very good avenue, or a very promising avenue for growing businesses. On one hand, private equity and venture capital provide an opportunity to continue to keep businesses as private without necessarily listing on the stock exchanges or going public. But when it comes to private equity, we do come to realize that in Ghana, private equity investment is usually made through regional or Pan-African funds, meaning that there aren't a lot of private equity or venture capital funds or firms in Ghana directly. This is more because the investors who provide the funds have a preference for regional vehicles. So there's really a dearth of data. There's limited data on Ghana-specific funds. But delving back into history as early as 1991 through to 1992, The USAID and the Commonwealth Development Corporation put up one of the pioneering venture capital funds, the Ghana Venture Capital Fund, which was to kickstart or put in place private equity funding, or in this case, venture capital funding to support firms in Ghana. The GVCF made 13 investments in Ghanaian companies. 9 of them achieved positive IRR in local currency terms, and some of them included Voltic, Lees Afrique, Achimota Brewing, Pioneer Aluminium. Some of them went on to become bigger players like Voltic, we know Lees Afrique, Achimota later merged with another, and Pioneer went on to list on the stock exchange some years later. Now, after the investments by the USAID and partners, one of the next key events concerning private equity in Ghana was the establishment of the Venture Capital Trust Fund Act of 2004, that's Act 680. Now, the Act actually created an agency referred to as the Venture Capital Trust Fund. Now, this fund was set up to be a fund of funds, meaning that it had tributaries or mini funds that were responsible to provide seeding venture capital funds focusing on investment in SMEs. After the Act was passed in 2004, the fund began operating in 2006. Since its establishment, the Venture Capital Trust Fund has invested approximately some 17 USD million in about 5 different funds, which in turn invested in roughly 50 portfolio companies. So by so doing, the Venture Capital Trust Fund actually kickstarted a domestic venture capital fund industry in Ghana. A number of the fund managers have fallen by the wayside, but one of the fund managers in the Venture Capital Trust Fund program, Oasis Capital, is currently raising a second round of funding, reflecting its success in managing the first round, which the Venture Capital Trust Fund invested in. In addition, one firm, Samba Foods, formerly a portfolio company of Bedrock Venture Capital Fund Company Limited, was listed on the GAX, that's the Junior Exchange for SMEs, in early 2015. So yes, a number of attempts have been made. Some firms have benefited. There's still a lot of room for opportunities to be tapped into. But there have been some challenges. To a large extent, the funds have been dollar denominated. So given the unidirectional depreciation as far as the cedi to dollar is concerned, this has posed a number of challenges. It also turns out that a number of the fund managers lack experience in private equity and venture capital management in and of itself. And then sometimes with changing government, there has been a lack of continuity as far as the private equity and venture capital market in Ghana is concerned. Now, while venture capital trust funds will dominate the local private equity and venture capital scene in Ghana, a subset of newer local players such as Fortis Private Equity Fund and Sagewest Investment or Sagewest Holdings have become active in Ghana since 2020. Sagewest was established in 2011, Fortis in 2013, and they invest in strategic sectors such as finance, real estate, insurance, education, manufacturing, healthcare. But overall, we can still say that the private equity market in Ghana is still in its very nascent stages, meaning that there's opportunity for more. So more research into what can drive the uptake of private equity and venture capital, because it's an avenue to fund and development and growth within an emerging economy like Ghana. So that brings us to the end of the session on private equity and venture capital financing. See you in the next session.